Hi, good morning. Sorry about the delay for today. We've had some small technical issues, but it's sorted for now. And ideally, our videos are going to go up on the YouTube channel for reference later anyway. So that's why we're going to continue with this week's session. And this week's session is going to be focused on to see if blockchain can have an impact on a future or an upcoming financial crisis, or to see if we have been what sort of learning we've been able to have from the previous financial crisis, and to see how the blockchain application can actually resolve that issue or prevent it, can act as a preventative measure for us, for the foreseeable future. So now we know from the 2008 financial crisis that it was the Lehman Brothers collapse that basically triggered the entire motion. So we know for a fact that they had over $620 billion worth of assets, and they had almost the same amount of debt. So there was the main issue that that at that point in time we saw that the credit rating agencies weren't actually giving transparent reviews. It was all fudged ratings that were being given, and the final investors were being tricked in this way. So the first question what I'd be asking you is, how do you think blockchain can just make a difference in transactionally, like for the financial markets?
Sure. So a couple of points there. One is that I think in the past this is something that I've highlighted a lot in general in fintech, and a lot of people are not aware about this. Most people think that actually when you have losses in the financial markets, most of the losses that get highlighted, they actually belong to fraud. Like most of them, right? Fraud or trickery, or somebody embezzling money, or somebody taking advantage of the investor, right? However, where the maximum quantum lies, maximum quantum actually lies not on the financial losses due to frauds. It actually lies on the financial losses due to wrong investments or erroneous investments. Erroneous investment in the sense that the investor is not savvy. Investor comes in with a half-baked knowledge, and he says, okay, I'll probably invest in Tata Motors in India. Stop. But he does not have the full history of Tata Motors. He does not know whether Tata Motors is going to be good in the future, right? Or whether this particular stock will even grow, to give 5x or 2x or whatever. So, on the other hand, what happens is, what ends up happening is you go through a recession and then you realize, oh shit, the whole automotive sector is down, and then you can't do anything, right? So this is a very important myth that a lot of people need to clear out, which is that most quantum of the financial losses don't happen due to frauds. They happen due to wrong investments, right? But they don't get highlighted in the media because obviously nobody wants to highlight the wrong investments. People are embarrassed over it, and they don't want to talk about it. And obviously it's hard to catch a general trend because this is like very fragmented. Like people might be investing, somebody might be investing wrong in gold, somebody might be investing wrong in stocks. So it's very hard to know. But yes, having said that, on the frauds front, actually on both the fronts, the frauds front and also on the investor education front, blockchain can play a very significant role. Let's take them one by one. So let's take frauds, right? So like the case of Lehman Brothers and the case of junk rating bonds, AAA bonds. Now, if you notice the reason, so it's very important to go down into the fundamentals and identify why that happened and what was the exact reason for that. Because that's the superficial news. What was the basis? The basis was that everybody was responding to their own incentives. Everybody was thinking very selfishly at that time. They were not really thinking in the context of the company, in the context of the economy, right? And that is what caused the catastrophe. So, but point is, at the end of the day, you have to design systems where people respond to the good incentives and not the bad incentives. However, what will happen is that people will respond to all kinds of incentives. So you really cannot control it. What you can do is you can design the system better. So the question comes, okay, how does blockchain help us to design a system better in this case? So what is blockchain ultimately? It is ultimately a decentralized database. It just helps you lay out the platform into multiple copies out there, with a full audit trail, full record trail, and tamper-proof. So if you lay out all these parts and you establish this on the financial industry, on say stock exchanges, right, or securities market, or in general the whole money flow, so to say, you take it step by step. So then what will happen is eventually all your securities, all your shares, and full money trail is now getting locked. Cannot be tampered with, cannot be changed. It can be audited at any point. So It's completely out there for everybody to do, like of course in a quick fashion with defined access. Now, once you lay out this simple fact in front of the public that hey, all your transactions, right, or all your securities and shares are pretty much out there in the open, not publicly open in the sense that it can be seen by the government if you give them permissions, but at the same time they can also have the permission to see it if they want to, right, or whoever the authority is. Then the incentives change drastically, right? Because then the incentive for a person to defraud or embezzle is almost zero, right? Because nobody would want to do a crime knowingly that he's living an arbitrary behind, right? So that's the whole point, like that's where the line comes in. So that is the classic aspect that removes the fraud, takes care of the first part. Now, if you go on the second part, right, which is investor education, people are really not aware about what they are investing in. And that is why they lose money, which is true. And this is something that is hard to control and should not be controlled as well. And the reason I say that is because if you try to control the market and if you try to control the people, in the sense that hey, you should not invest in cryptocurrencies because they are risky, right? Or you should not invest in junk bonds or these bonds because they're risky. If you try to control that, then you change the open market system into a purely capitalist system. But then what happens is instead of an open democracy, you now have a defined capitalist system saying, okay, only these people can invest in these many stocks. That's not the way things work. I mean, if you do that, then you're pretty much restricting, freedom of choice, so to speak, which is not a good regime to be in, not a good government. So nobody would want to be in the US if that happened. The reason people like US, India, all these democracies is because people are open, right? And so given that we have to transition towards an open market, then that establishes the fact that the market will always go through an S-curve, through a classic correction cycle. So it will reach a peak and then it will go down. So there is no way to prevent people from making wrong investments. There's just a way for the market to learn. Right? So what the people can do is make themselves more aware. Right? So using, for example, the rating tool that we are using. It's a classic token rating tool, which helps them understand all forms of tokens right now, digital tokens in the market, right? What they do, how they do it, how do we rank them, what are the parameters important for them, so on and so forth. We're also launching white paper on that soon, right? And so that I think these kind of initiatives help reduce the second point, that help make people more aware and reduce the erroneous thoughts of this. That is the thing that changes.
So anyway, the focus, we know that financial crisis is basically backed by the banking system. Right. So there are investment banks, there are commercial banks. So we know that all of them are impacted by that time. So how important do you think is trust a factor over here, and how do you think blockchain can basically, because the entire system is based on trust, right? And we've clearly seen in 2008 that they played at this aspect of it. So from that perspective, how do you think blockchain can add value to the system?
Sure. Good question. So, if you notice, I mean, again, that goes down to the fundamentals of blockchain. So, blockchain essentially is a trustless system. Right? So, what it says is that, hey, you don't need to trust a human being, you trust the process behind it. And you trust the process that we are building. So, in this case, also, what blockchain says is that you don't need to trust the bank per se. Till now, yes, till now you have trusted the bank. Till now, you have placed your complete money in the hands of central bank like RBI or US Federal Bank, and then they have placed a trust in those small banks with audit trails. But at the end of the day, these are human institutions. Right? These are human-backed institutions, and as we have seen in politics as well, I think humans are irrational. There's no way to predict what humans will do if incentives go south. So that goes for banking as well. So it's very possible that these bankers respond to perverse initiatives, perverse incentives, right? Like at the time of demonetization, we saw that. Right? These bankers helped politicians, and these bankers put in money for VIP individuals, right? And that's why they still have cash easily. So these things will continue to happen if humans are involved, right? And if you trust humans. So the only way to do that is you remove the trust in humans, right? And you say, okay, now we don't need a bank of humans. We just need a bank for numbers. It's just a repository of numbers saying that okay, money is moving from point A to point B, so debit point A and credit point B. Right? So money movement, trade finance, issuing, accounts, KYC, checks, loan financing, all of this is ultimately numbers. That's what bank is doing. So can numbers be trustless? Yes, because ultimately it's mathematics. So we can pretty much establish a system saying that all your accounts will now be decentralized. All your data is now decentralized. It's not stored in one particular bank, it's stored in multiple copies out there. So even if one bank goes fraud, it doesn't matter. Will be consistent there, right? They're genuine. So through a classic trustless democracy, yes, we could easily change the banking industry.
So anyway, the Lehman Brothers is a time that we know that instead of actually correcting their balance sheets at that time, they were focused on expansion, and they didn't give any sort of transparency. There wasn't any awareness that was formulated. People only found out once it went really bad, right? So I think ideally, like from what you've explained, we know for a fact that blockchain would have been able to identify these transactions, these dubious transactions that were there in the beginning itself. And if Lehman Brothers were able to react on time instead of focusing on expansion and correcting their balance sheets, similarly, the other bodies or the banks as well would have followed the same steps. And we ideally could have avoided the same things. So it's coming to my next question. So like, in India right now, what we're seeing a banking crisis that's actually happening. For the last 2 years, 2 years plus, we have had close to 90,000 crores worth of banking scams alone. We've had the Punjab National Bank, we have the Punjab Maharashtra Cooperative Banking System. So over here, the government is actually demonetized the entire country, forced the citizens to actually adopt banking systems over here. So how important do you think blockchain can be, an added, can bring an impact over here? Because people are losing trust in the banking system, right? Repeated frauds over here. So especially for the Indian-focused markets, right? So how do you think so that they could actually strengthen the banking system?
Sure. Yeah, it's going to be very important. I mean, but the timing is going to be different probably because Indian government has been ambiguous for adoption. So it has been adoptive in just the technology part, but then it has been dismissive of the cryptocurrencies. So which is ironic. As we know, like, blockchain cannot exist without cryptocurrency. So you can have a private chain, yes, but then private chain is only, as the name implies, it's only limited to that particular circle. If you really want to go global scale where you allow anybody in the open public to participate on the chain, you have to go public. You have to go public chain. So public chains, then sure, you can avoid the trading of cryptocurrencies or reduce the trading of cryptocurrencies to tokens, but the token will still exist. Right? The token is the reward. That's how the blockchain is structured. So I mean, it's idiotic for a politician to say that yes, we allow blockchain, but we'll not allow cryptocurrencies. that is simply not the way it works. That's like saying we'll have a computer, but we'll not have a screen.
Yeah, use the internet, but no internet.
Exactly. Right. So that's not the way. So you can't have a computer on the screen, right? So those things. I mean, probably they will learn eventually. Hopefully, with younger people coming in, younger CMs, But yeah, so on the Indian banking industry front, I think the first and foremost focus of the government right now, anyways, is just to get out of this recession. More importantly, also to get into a phase of job growth. Right? So jobs has been a major blocker for India for a long time. And there's something I think which we have coined the term called jobless growth. Right? So it's actually a jobless growth phase that's happening. And somebody told me a statistic yesterday where I think every year we're adding almost 1.5 CR, 1 to 1.5 CR worth graduates for the employment industry in India every year. So 1 CR every year are going into employment. But the rate of job growth has not changed since 2004. Right? So still at the same rate. Now, due to that, what's happening is, if you notice, a lot of these people are actually moving away from traditional ecosystems. So they are ditching the banks, they are ditching their Aadhaar card. A lot of these people don't even have Aadhaar card now. They just say, okay, hey, we'll not go for these traditional banking systems. We'll go for gig economy. Just work freelancing, do 1 month here, become a delivery boy, become a driver, become something else, right? Earn some good money because these jobs are also paying.
Yeah,
right. So people are actually ditching the banking systems. They're saying, okay, we don't need a traditional banking. We don't want to do traditional route of get a bank account, get a KYC, get a job, live in the same job for life. Like that's not the way. So people are ditching that. So there's a major shift that's happening on the demographic front. But the banks need to adopt on that. So if the banks don't adopt on that, they will die eventually. So I'll give you an example of, like, say, a bank like SBI. If SBI is not thinking in terms of how to adopt blockchain, how to adopt cryptocurrencies, or in general how to adopt the new financial instruments, they will lag behind, because most of the private sector banks are definitely taking the lead. So at an overall level in the banking industry, this is one major trend in the banking business. And then specifically in terms of blockchain, what will happen is the way things are progressing, government is definitely taking a keen interest on just the technology front, as we discussed. So they will try to impose some sort of a national blockchain frame, which I think RBI released some time back. Their own very simple bullet, and there was a discussion on the parliament as well for that. So that will happen, and then that will go as a simple memorandum to all of these banks saying that, hey, you need to adopt this thing, you need to work on this thing. Then the banks will start picking up. Some of them already started, which is a good thing. And once that happens, then the question will come in, okay, how do these banks really tie up together on a common thing, common option? And that's where common needs to be. So all this is good, all this is step one. The real benefit to the customer will happen beyond this, when this blockchain actually leads to customer benefits. So for example, say my loan process becomes transparent. So to give an example, I took a home loan last year. Now, when I took the home loan, I had to inquire multiple different banks on what is the best credit rate, which is the best interest rate, which is the best policy, etc. And all the time, the processes were different for different banks. And all the time doing this, I was not aware of how my credit score is getting impacted, and even how my credit score is calculated. Most of people don't know that. I'm sure you also know, right? How your credit score is calculated.
Yeah, they don't know what the parameters are.
Exactly, and what's the average. And I mean, sure, they would have the reason, okay, that is a proprietary and all that, but at least you should know the basic fundamentals, right? How it is impacted, and what things you should not do. Right? So these are things which are not really taught by the banking industry, or the banking industry is not really opening it to the customers. And this is where blockchain comes in, because eventually the way I see this going is 5-10 years down the line, when all the banking industry, say in India or maybe some other country, depending on the pace, comes on the chain. Then what's happening is your full loan approval process, right from the point of application to the point of reception. All of this is on the chain. So I can see each and every touch point. I can see, okay, which banks did what action on my loan application process. So then that will be a transparent flow. That is where it needs to go.
So I'm just going to, probably this is the last area that we're going to touch off. We're going to touch on tradable financial instruments, right? So most of the tradable instruments that we know are asset-backed, right? So what I want to know is, I was reading somewhere and I found out that right now it's this transactional value that all these investment banks actually focus on, right? So, but now when you think about implementing a blockchain system, then these metrics are not important anymore, right? So you don't need to have the certain number of assets. So you don't need $20 billion worth of assets to actually issue securities worth $20 billion. So then your market forces are, the dependent on market forces are changing, right? So then you're going to be moving to a cash flow based system, right? So they'll be valuing transaction based on cash flow rather than just transactional value over there, right? So do you think that is ideally the direction banks should be heading towards, and so should they not be valuing financial instruments based on asset-backed securities, and will the blockchain actually allow them to strengthen that valuation system that they actually have?
Yeah, so asset-backed securities has been, you're right, asset-backed security has been pretty much the core focus of how banks value anything. Now, if it extrapolate the concept of transparency that we just discussed and apply it to say securities, in securities the primary thing that has been in terms of the customer and consumer, so to say, has been, of course, one, the solidity, like the backing of that security, what lies behind the security, and then secondary comes in what is the future prospect, which is tied into the first one, because you have to have a solid backing in order to have a good future prospect. So for solid backing, yes, most of the securities release papers and release notes on, okay, how exactly they are backed, what is the backing, what is the institution backing, capital, etc., and the risk as well. Prospect is unclear, right? Because prospect is something which is pretty much like guesswork, so to say. Not like educated guesswork, right? So you can make an educated guess on what are the parameters you know and what are the things you know. So since it is an educated guess, that means by default that the more parameters you know, and the more information you have, the better your guess will be. Right? So if you lay on that fact on the chain, then what that means is, okay, if the more information I put on the chain is relevant to the security, the better the prospect of the security. Right? Because then the investors will be able to predict in advance, realistically, right, that yes, this security is growing by 100% every year, for example. Now, in the past, what happened again, because of the insane valuation, and happens a lot in the startup world as well, in the private world, all the shares, all the securities get bloated because the prospect of growth is so humongous. People miss out on the fundamentals. People say, okay, this is not to grow. Why? Because these are factors that we know. But then they don't know the rest 98% of factors. It's like, if you're driving a ship and you see an iceberg, you see the top 2%, oh yeah, it's a small iceberg. You don't see the top 98%, right? That's the problem. That's the classic Titanic story over and over. So in order to put that remaining 98% of the iceberg also on the chain, right, you will have to create a public chain where all these securities, all the banks are tied in. Then, yes, the banks will be able to much more realistically provide an estimate of value, and the customer will also be able to take it. And then, yeah, you will not have the broken valuations in private world or public.
So that's good. Anyway, so just moving away from banks, this is the last question. I don't think we have that much time anyway. So just moving away from banks itself. So we know how what impact that the credit rating agencies did on this thing. So what sort of an impact can blockchain-based rating bring over here? Right? So now if Crisil was actually releasing rating reports, and if they were based on blockchain, and so the reports would be immutable, nobody would be able to tamper with them, right? So do you see that as the future of rating, like right now, for like even in India, it doesn't have to be this globally, rating agencies in general, should they move towards this sort of a system?
Right. So I think rating in itself is good. Like for example, even right now, the way Crisil does, the way all these other platforms do, the ratings in itself are pretty solid, I would say. So I don't see a problem with the rating system per se. But yes, right now the rating system is only applicable to the traditional financial instruments. Right? It's not applicable to tokens on the blockchain. So putting the rating on blockchain is something which I don't see happening. I don't see the need of it unless I'm missing something. But yes, including the other world, that is crypto token world, in this rating, yes, that is something I see. That is something which is valuable and should happen. And the simple reason for that is because, as we discussed, the majority of losses right now in the crypto world or in any trading happens because of wrong investment, uneducated investment. So people are just excited by the frothy nature of the bubble. They just invest in Ethereum without understanding what Ethereum is, and then they get panicked. When they get panicked, then the government panics. Government tries to shut it down, which is what is happening. So yes, including those in the ratings will be very, very useful. It's actually useful for the overall nature because then you stop this vicious circle. Then the whole crypto is bad thing goes, right? Because then you can say, oh yeah, these crypto are good, these crypto are bad. So transfer. And that's how it should be, right? I mean, for example, a lot of companies are fraud, but that does not mean the whole economy is fraud, right? So it's exactly the same thing. So there are a lot of cryptocurrencies, a lot of cryptocurrencies are fraud. Yeah, we should not deal with them. But then there are a lot which are pretty awesome. Bitcoin, of course, is the leader of that. So we should not blame every cryptocurrency.
Now we actually getting stats also on saying that the banking systems will be benefit of a blockchain.
Yeah.
Bank Santander just came out with a report that said that annually they would save $20 billion transactions just by using blockchain-based systems. So we know for a fact that blockchain is going to strengthen the financial system, and so that's we're done with the questions for today. So we just we'll see if there's anybody who wants to give some other questions.
Yeah, I think we have two questions.
Yeah, so there are two questions right now. What's the future of Ethereum, Ripple, and BAT between now and 2022? So that looks like more of a investment advice, I think. And then we have another one where blockchain technology. What could blockchain technology do for human beings in the next 10 years?
Okay. So we'll take it one by one. So yeah, so first one, Ethereum, Ripple, and BAT. So these are three very, very different tokens, very different purposes. So Ethereum is more of a platform level token in the sense that it helps you develop new tokens on top of Ethereum. So Ethereum in itself is valuable because it helps you build so much on top of it. The default value of the platform grows because the application is growing, and the application is growing because of speculation. Right? So this is very, very interesting analog, which is actually a reverse analog from internet. So if you notice in the internet, what happened was, if you were an investor in HTTP or the initial protocols, SMTP protocols, FTP protocol, you would not get much value of them. right? Because they are not financially tradable. They're not really companies. Also. But yes, if you were an investor in Google, then you would understand it, right? So because the application, so if you were to plot it out, the application stack is this thick, the protocol stack is thin. So protocol stack value is less. The application stack value is more. Why? Because it's all data game. So Google has more data, Facebook has more data. So that's why if you invest in applications in Internet, you get more value. That's how you see the startups running right now. But blockchain is going to reverse it. Why? Because now the protocol is more value and the application is less value. And as the application grows popular, it actually gives value back to the protocol. Right? So, and the protocol has a token. Every protocol has a token attached, right? So Ethereum has Ethereum, of course, Bitcoin, Ripple, right? BAT is a token for the browser. So you already have a token attached to it, right? So the real economic value is actually getting aggregated below, right? Not at the top of the chain. So that is why building application on blockchain is going to be less valuable in the long term as compared to building a protocol for blockchain. So this is very sort of interesting thing which actually a lot of people are not aware when they're building first time blockchain. So coming back to this, I mean, since all of these are actually at the protocol level, future is very bright, and these are actually very solid tokens. BAT, Ripple, and Ethereum. In fact, I invested in pretty much all of them. So I mean, I see a very bright future. I'm not into price predictions, so I don't do prices.
So the future of blockchain in the next 10 years?
So this is a very broad question. So I mean, the next 10 years is going to be impacting everything. Some sectors more, some sectors less. So there will be some sectors which will not be impacted at all. For example, maybe construction materials, fashion industry. These sectors might not be impacted at all because they're the origins or the trade and all these things are not significant. So it's all about which sector has the most trust gap and which sector has the most pain point. So trust, so banking industry has insurance trust. So these sectors will get impacted heavily.
One more question. As Reliance is planning to enter blockchain technology, will it bring speed to the finance sector to adopt the technology?
So Reliance itself, not so much, but Geo yes. So because Geo is, it's like pretty much the backbone now of the digital economy. People doing authorized fintech transactions on the phone. The reason they're able to do it on the phone is because of Geo. So Geo was the first to lay out that level of infrastructure right across the country. So given that Geo or Reliance is thinking of investing in blockchain, that will definitely be a push, especially for fintech companies, because there are a lot of fintech companies that are building applications specifically for smartphones. Now, if you're really able to build a public chain for the country where cellular networks, all your phones are tied in as nodes, it's going to be a very hard thing. It's not an easy thing because one, we really are not that tech savvy yet. People are generally not tech savvy yet. Second is the phones that we have are not capable of performing the functionalities of a node. Your phones are very low power. That's the biggest problem. Exactly, right? So you don't really have a good hardware phone yet. So unless you're able to magically do hardware at that level, right? Or you're able to magically reduce the complexity, which a lot of these are actually what the chains are trying. Yeah, so speed of the transactions. Yeah, I think it will take some time, but yes, eventually we will reach that level where the smartphones all features will be so maybe 10 years.
Yeah, so I guess should we? I think we're out of time anyway, so we won't take any more questions. It was a great, really informative session today, and I'd like to thank Rohit again for giving time on the Saturday, and just for everybody to know again, we are an enterprise solution company, and we do anything blockchain related, including blockchain training. So if there's any requirements or anything that if you want to upskill yourself in blockchain, contact us at admin at birthvenue.in. Follow us on Facebook. It's Birthvenue. You can just search for Birthvenue. At Twitter, we have at Birthvenue is our handle. Follow us on all social media pages. We'll constantly keep giving you informative material like this, and hopefully we'll try to drive more of blockchain enthusiasts like in our circle, right? So thank you. Have a good Saturday, guys. Bye bye.